Hello, crypto ladies and crypto gentlemen. I'm making this short video about the excellent trading system performance for the different cryptocurrencies. The first one was about the Solana because the profit factor was 140. I never found it anything like that in my researches. In this case, I have decided that I need to start exactly from Solana. The second video was about a Bitcoin. It was issued yesterday, and today certainly the second biggest cryptocurrency is Ethereum, and I want to start exactly from the profits histogram for better understanding of the fact that actually efficient trading system is methodology, the algorithm, which has given us a huge non-linearity. So we have a very strong team pin ads, and from the right side, from the positive returns, and very small one for the negative returns. And this connection, I have decided that it's better to start exactly from this point. So this is methodology for the same methodology without any kind of the improvement. It's Ethereum USD from the 6th of August 2017, approximately 5 years. And we have different buy signals, and the sell signals used just for the closing position. In this connection we have a lot of them, but actually we are using just one sell signal, so we are parameting the position and closing this position just by one signal. So in this case we have for the total performance, total results. We can see that the distribution of the different that cycles, we have a cycles of distribution of this profit. We will stay on the total figures a little bit later, but I need to say, when we are looking for the trading systems, at first we need to look for the drawdowns, certainly. And it's highly interesting to understand that, for example, deals from 0 to 200, they have the negative mathematical expectation, and just after that it was a period of the huge growth of the Ethereum prices, and we can actually make a huge profit from parameting during such an excellent periods for the when the cryptocurrencies are rising very quickly. So after that, for such period with the very strong correction and the bear market as we have currently, we can certainly lose money or make just a small portion of them. So in many cases it's like the other emerging markets, we need to look for the emergency. So for comparison, we just need to understand that during this period, with the researching time period, we have a late of 1659 days. The total result for the for Ethereum was the rise for 519%, from 1 to 6.19. 519% of the growth, and currently we are looking exactly for results of our trading system. So here we have the deals, total number of deals. It's 373, quite oftenly when we need to make a deals. The probability of the winning deals in the total number is 46.6%. The standard deviation of our profits, of our results, is 0.84. The mathematical expectation of each deal, of average deal, 1.61. We need to say that we are talking about a percentage, so the average is 161%. And the total number of all the profit, the sum of all profits is 31,400%. 31,400%. But again, it's just a trading methodology. In this connection, the money management is highly important point, and we are not talking about the money management. In this connection, certainly it's unreasonable to expect such a huge profit as 31,400%, because on each deal we will risk, for example, if we will make position just as 2% of all our capital, we will have one situation with our profit. If we will have another much more risky strategy, we will have another situation. But sometimes during the strong period of growth, we will need to pyramid our position, for example, 20 times or maybe even more times. In this case, in the next videos, I will try to analyze exactly this component, because I'm going to develop this methodology step by step, from video to video, to have something new for you in the next videos also. And hugely important for me component, which is known as the profit factor. It's the relationships of all profits to all losses. So here we have the situation when the total profits from profitable deals is 355 points, and maybe 356 points, and the total losses from the deals which were closed with negative results is 42. In this connection, the difference is giving us the net profit in 340, and relationships between the profits and losses is 8.5. It's amazingly good result, because the emotionally neutral is the profit factor 2. It's like the game when you have the 50% probability to receive profit and 50% probability to lose, but you are receiving $2 if you are winning and just $1 if you are losing. Actually, in this strategy for this period for Ethereum, we have situation when our profit is 8.5 times higher than our losses. And just a second, but it's not the mathematical, it's just relationships. And plus that, I'm analyzing also the maximum profit relative to the maximum drawdown from the deal, from maximum deals. So highest and lowest results. And this relationship is also 7. It's also very good, because if we will have a business with the maximum drawdown will happen, we will receive just a small portion, or we will lose just a small portion of our trading capital. In this case, it's amazingly interesting also. So such results we have in this system. And I hope that you will send me the links of your systems for my better understanding how is it working. And here you can see that, for example, position was opened in different days, in 4 consecutive, 5 consecutive days, and it was closed. 4 of them were closed in 1 day. So it's the same what I have told you before, that the same situation in the end of this our researches. And certainly just a small point that is necessary to be told. First of all, this strategy is not working on the shorter period of time. I have tried to use it for the half hour, 1 hour, and other researches, but it's not working perfectly, just for daily charts. And what is important for me is I have made the researches also about the joint correlation between the 12 biggest coins and plus waves, which I like. And here we need just take a look for this part of this. It's a head map of the daily returns correlations between all of them, and it's quite interesting that, for example, if you have a very strong correlation, and you know that the it's very close to, if they close to 1, it's very, you know, that easy color, and more dark if it's they have not correlations. And we can see that if we are going to trade such a systems, as I told you before, we need to take a look exactly for the correlations, because if we have a strong correlation between different tokens, between different cryptocurrencies, such as between just a second, between Matic USD and AVAX, for example, 91% correlation. We need to understand that actually it will be not so strong diversification in this pair, and diversification in TerraX against AVAX will be more serious, because the TerraX is not so highly correlated with the HEX, for example, even with Ethereum. It's not so seriously strong. In this case, when we're choosing the stocks, the cryptos for our positions, we need also to think about the correlations between them. Because if they have a very strong correlation, they will not have any kind of diversification. So this is all information. Excuse me for such long video. I will try to make next ones shorter. Thank you very much. Have a good trading, have a good profits, have a good profit factor, which is excellent measure of the quality of your trading results, and actual, such as actual as the backtesting. Have a good day. Bye bye.